All eyes are on the Strait of Hormuz as 10% of the world's oil supply continues to be trapped. Additionally, as the bombs fell in Iran, so did 10 of 11 market sectors, pushing the S&P 500 into oversold territory for 18 straight days. Have we now finally found the bottom, or is there another shoe just waiting to drop? We'll take a look at that in today's market forecast, along with 2 new trade ideas and 5 tips to trade a difficult market. Let's start with oil. Taking a look at crude oil, ticker symbol BZ1 exclamation mark. You can see that once, twice, thrice as of Monday, we hit a high of around $112 3 times. Could it go higher? It could, but since the bottom here in 2025, oil has increased almost 125%. That's a large increase in oil for 10% of the world's supply getting locked up. We've seen a 125% increase. While it could go higher, I've seen reports that suggest it could go as high as 150% increase. I think we could be nearing the top. Now keep an eye on this 112 area. If we break 112, then we'll look at some new resistance levels. But oil going up has been what's been driving the market down. If we bring up the S&P 500 here on a new price scale, you can see, if we make them both line charts, that as oil skyrocketed, that was the catalyst that drove the market on down. Now go look at any market forecast I published in February. We were talking about the S&P 500 going down. This did not surprise us. What did surprise us is that oil was the catalyst. So if oil can find some resistance here in the next few days, there's a good chance that we could find some support in the S&P 500. Speaking of which, let's go look at the S&P 500 bouncing up off from a confluence zone that we established several weeks ago here with our market forecast. Now, in full disclosure, we got very close in our YouTube market forecast, but we finalized it in Power Trader Live. You can go look at our Power Trader video from 2 weeks ago where we established this confluence zone at 634 on ticker symbol SPY. All of these flags, the orange flags, are what we use to establish that confluence zone. Now, I'm hopeful that this will hold. Should it break, we've got a second confluence zone down here that could become support, and we've got a long way to go until the news media starts to classify this as a market reversal. Now, one of the reasons I'm optimistic for some support here is because 10 of the 11 market sectors are in oversold territory, or have recently been in oversold territory, with the one exception of energy. Energy, being driven by the price of oil, is overbought, but everything else is oversold. That has had the effect of making the S&P 500 oversold. I decided to create an indicator to help with a case study that shows when the S&P 500 has been oversold for a certain amount of time. This indicator is based off from a 50-period daily moving average with the blue line set at 1.5 standard deviations. Customarily, 1 standard deviation off from the 50 is considered oversold. So we're deeply in oversold territory. And you can see that we spent 18 days, 1.5 standard deviations or more away from the 50-period daily moving average. Well, let's look historically at how that's played out in the past. You've got to go all the way on back to 2016 until the last time this happened. And you can see that we sold off. This particular streak was 18 days as well. And shortly after that 18 period oversold streak, we had a period of rising S&P 500. Let's go back and look at the next time. We've got to go back to 2008. And you can see that, yeah, the market was selling off, but we had 1 or 2 weeks of the market rising before the sell-off continued. Now, to be clear, I don't know that this is going to happen. This was a different market circumstance. This was the financial collapse. You guys remember that from 2008? And I don't think that's what we're looking at now. We've got a catalyst happening over in the Middle East, and as soon as the market gets some confidence in the price of oil, I think we're going to find support. Let's go back one more time here. We're looking at 2001. You can see that we had a period of 18 days where we were oversold. We came down, we bounced, and continued on higher for several weeks. Yes, the market did continue on lower, but if we're looking at how we're going to trade the market this week ahead, I think you're probably looking at some kind of a bounce up off from confluence. Now, will that be the ultimate bounce, or will we continue lower? I don't know. You should like and subscribe to this channel so that we can keep you briefed as the market continues to unfold. But for this week ahead, I'm primarily looking at bullish trades. Now, one of those bullish trades I'm looking at is McDonald's. Taking a look at McDonald's, we entered this trade in Power Trader Monday morning, and we are nicely profitable. I think there's still an opportunity to enter this trade if you want to. Taking a look at our stochastic oscillator, stochastic is still yet to cross above 20 with a pullback to our support. And additionally speaking, we had a Fibonacci support here as well. I'll draw a quick Fibonacci line on here so you can see it. Pulling back to this bottom in 2025, January 2025, you can see that price is bouncing beautifully off the bottom of that Fibonacci zone. This is a textbook son of Fibonacci trade entry. Before I move on to our second trade idea, if you like this kind of trade, come join us on Monday morning in Power Trader. There's a link in the description. You can get a trial for only $10. Now moving on to our second trade that we looked at in Power Trader on Monday morning. This is ticker symbol KTOS, Kratos Defense security. Looking at this as a Middle East conflict trade. And you can see we're profitable on this trade as of close Monday. Stochastic getting ready to cross up through 20. And we've got a Fibonacci support that we're bouncing off from that we identified in Power Trader. This is a great little trade with a target on up here around $94 and a 1R target, which leads me to your 5 tips to trade a difficult market. No doubt it's been extremely difficult for the last 5 weeks to trade this market, really since the beginning of the year. But trying to predict the bottom of a market is the most difficult thing we can do as a trader. So here's your 5 tips. Number 1, reduce your R size by 50%. If you don't know what an R is, come join me in Power Trader and ask the question. It's a very specific way of managing risk. Number 2, increase your stop size, which effectively, if you're using the R system of risk management, is going to reduce your position size. Number 3, consider scaling into trades. If you've got a system that allows you to buy 100 shares, start with 25. And if it moves against you, then add to it. It's a way of dollar cost averaging responsibly. 4th, never let a winning trade close for a loss. I would be aggressive with my trailing stops and make sure that as a trade moves profitably, I'm moving my stop up quickly to lock in at least a portion of that profit. That'll improve your win-loss ratio. It will decrease the amount of money that you could have made on winning trades, but it's going to help prevent you from losing a lot of money on the losing trades. And then lastly, you might want to consider adopting a little longer term perspective on your trades, giving them just a bit more time to work themselves out. That's your market forecast for today. Make sure you subscribe so you can stay updated with the most recent trade ideas. We'll post another forecast later this week. And until then, blessings and favor on all your trades.